We are live. I'm going to take a minute and just double check that the tech is working uh, before we get started. I hope everyone is doing well. Everyone is doing well. Everyone is doing well. Everyone is doing. Okay. Hi, everyone. Just give us another minute, double checking all the tech. We have some fun stuff planned for tonight. Just gonna double check I did it right. And perfect. Hello, everyone. It's Margot Mastery, your Heartfelt CFO. I am so excited to be here with you tonight. I have prepared with our special guest. We are going to talk about a lot of things to do with tax. I'm going to introduce you to Anne and share a little bit more about Heartfelt and some exciting things. If you are new to the Heartfelt world, I am a CFO for the mental health industry. We help mental health business owners around business, tax, and all of the in between. I'm here tonight with I refer to him as our tax manager, but our tax team, and his name is On, and he's going to educate you all on some things that I thought was important. If there's some follow-up questions, feel free to ask. The few things that I wanted to talk about tonight was a lot heavy tax related. So, On, how are you today or tonight even?
Hi, I'm good, and hello everyone. I hope everyone is doing well as well. And the thing is, it's been likely really good uh, to have you on call, and it is always lively whenever I get on call with you. So I really feel good uh, on webinars and whenever we go live. Uh, Ever with you. This is
Oh,
something.
same here.
So let's start the some discussions that obviously most of the people are facing a lot of issues, and at the year end they will be likely, oh, I
Well,
would have
before you
done
dive
that.
Okay, so just before you dive in, I just want to tell everybody. So Anna is the force behind Margot and bookkeeping and accounting team to help with all of your tax needs. So I wanted him to be front and center tonight, and he'll be available going forward for scheduling. We officially opened accepting tax returns now that the year ended and all the things that go with that. So him and I talked about a few things, so I'm gonna hand him the mic now. I just wanted to add that in. An is the tax who brings everything together now, and he's really been incredible at making HCT a better place. Go ahead, An, that's all yours.
Yes, this has been a really good experience with Hertzfeld, and I have been working with Margot. It's been like the 2 years, and I have total about 15 years of experience in Texas, and I'm I do not look too old, but I have a lot of experiences for sure. Uh, but I can say that most of the people are still unaware, and there is a lot of awareness needed. While we talk about the taxes, there are a lot of things that most of the people are missing, and always discussing when they come to file their tax return. Uh, and I have to mostly tell them they must do the things regularly, and they must plan the things when the year start. And but usually when they are coming at the end of the year, that means that they're just gonna report what has already been happened. So once we are going to start the 2025, and you must ensure few of the things that you can go through uh, specifically while you are just going with uh, the tax plan, your financial budgets. You need to see that how your 2025 will go. For this, the basic thing is you must complete your 2024 first. That is something, uh, one of the most important thing, because if you will not complete your 2024, you cannot budget the figures for 2025. And uh, if you haven't done that, now is the time. You must just start it up. If you haven't paid quarter one, quarter two, quarter three of the estimated taxes of 2024, I will just discuss this in detail. Then you must at least pay the quarter four uh, of year 2024 estimated tax payment. You must have the estimated income at least for 2024, that you must you have to pay the quarter four payment by today.
Right
It's the
today.
15th already. So uh, even if it's a day or two after the 15th, it's not a big deal, but obviously it will save a huge amount of penalty if you will be just paying the tax on April of 15th, or even after with the extension. So what IRS requires that we need the money in time, and you can get the extension. You can even go till September or October for the filing, but they need the money first. So the estimated taxes is something you pay on quarterly basis for upcoming year. For example, we have just started the 2025. The first quarter payment will uh, be made on, sorry, hello,
Yeah,
can you hear me? Yeah,
perfect.
sorry, I was just bit lost. I just thought like something cut it off. Ah, so I was saying that the payment will be likely in the first quarter payment of 2025 will go in the April, and you must be assessing that if you have filed your taxes for 2024, then you can just get the figures for 2025. That is likely you must at least pay 100% of tax that you have due in for the 2024 as estimated in 2025. That means IRS assumes that the tax payable for 2024, you must be earning at least equivalent income in the 2025, and you have to pay the same amount of tax during 2025. So what you can do, if you were just owing $10,000 for 2024 tax, you can just break it into four pieces: quarter one, quarter two, quarter three, quarter four, and you can make the installments to the IRS for 2025. So this is one methodology, that on the basis of prior year tax, you can estimate at least your tax amount for 2025 will be the same, or it can be higher. So you just pay the taxes on the basis of 2024. The other methodology is you can just calculate your quarterly income, and you can calculate the taxes on the basis of the budget, and at least pay the 90% of current year income. So if you're just very good in maintaining cash flows, you can actually make the exact estimated payments while preparing uh, and while just paying the taxes, while you're just going to calculate the taxes, obviously we will be needing the figures like you have earned $25,000 in quarter 1, so you can estimate if by the end of the year you will be earning likely $100,000. So you can just calculate the tax on the $100,000 and divide it into 4 quarters, and you can make the payment at 90% of that amount. So in current year, we take the 90% amount to calculate the estimated taxes. The other way is if you don't have the current figures, at least you can take the prior year figure and pay the equivalent amount of tax as estimated tax for 2025.
So the reason why we're giving a back on this around the estimated taxes is that the first question I always got with a new client, and through my DMs, is always around estimated taxes. So I wanted on to educate you all around a process to go by so that you have a way of something to work from. If maybe you don't have help, you're in between help, you're trying to reach your help, they didn't answer. We hear all of these sorts of these scenarios, and we wanted to give you a way to have an answer on how to handle estimated taxes. I feel like this is a good entryway point. Like another common question is around entity choices. Um, because lots of times they're in the mental health industry, they're like chaperoning, managing interns, so they don't necessarily have the license yet. Um, and sometimes I've even seen them require entities, but they're really just an independent contractor. It's not worth the entity. So would you mind maybe like speaking to the idea of like, even though an entity is worth it and it has its perks, but sometimes in the phase that you're in, the headache of accounting, I mean, let's just call it what it is. It could just be more of a headache, you know, like maybe some cues around when it's good to have an entity and some things to keep in mind.
That's the one of the most interesting topic, and people have been going through
Exactly.
a lot of difficulties. Specifically, when you're just going to start a business, you must be thinking about what type of entity you must register for. Uh, there are certain professions, like you mentioned, that mental health doctors, psychologists, and general physicians. And if you will talk about the tax professionals, even nowadays, freelancers are also that are considered like there is a 90% chances of success, and they will be earning a high level of income. So the first thing is, you must consider what is your taxable income, and what amount of investment, and what would will be the rate of return you will be expecting. So what will be the income in first year, what will be the income you will be expecting in the second year or third year. Obviously you cannot be very accurate, but you can actually assess by looking around some of the business examples, and looking into your circle, you can just assess how much you can earn within the first year, second year, or third year. So if you're just going to earn like $300,000 and above for first year or second year, and eventually in first 3 years or 4 years you will be just getting to this amount. So the I would recommend that C Corp is the best entity you can select if you are a high income earner. It is because if you will just look on the slabs of your personal taxes, you will just fall into 24%, 35% very quickly. So after 300,000 you will be just in a very high slab, where if you will select the C corp, it will be likely you will be having a 21% flat tax rate. That's one of the benefit of the C corp. But on the other hand, you must select your wages very vigilantly, the wages you will be taking from the company, because if you will be withdrawing high level of dividend, high amount of dividend, that will be actually uh, making you getting taxed twice. So one time you are actually paying the tax on profit in your C corp, and then the dividend you received, you will be paying the tax on your personal taxes on the same amount of dividends. So you must choose and plan the things very vigilantly. If you are a high taxpayer, I have just explained that. In my opinion, I consider C corp to be the best opportunity. And if you are just a small business and going to be a small entity, I think so that S corp is one of the best option. What you do is actually you will be just registering an LLC, and then you have to apply for the conversion of an S corp. So S corp can be converted, likely that must be converted within 1 year, but there is a chance that you can just get converted within first 3 years as well. We can actually consider the late SCOP conversion filing as well, where the commissioner can consider that if only the time is the reason that delayed the conversion. If you weren't been able to decide at the moment of registration, and you got delayed, and you are just thinking to convert it into a scope now, and it's not too late. If you it's just the entity is just 2 years or 3 years old, you must go for the conversion, because it actually saves the self-employment tax on your income. It
We
will remain.
actually had, I'm actually glad you brought it up around the self-employment. If you can elaborate that, our listeners could understand what self-employment tax even means.
Yeah.
If you remember tax season, we had one client who just could not fathom what was going on when they saw the line item of self-employment. Like we're talking here around the double taxation. So if you could explain more but more so that they really get self-employment is real with that double taxation.
ah that
I
that's
remember, sorry to cut you off. I remember when I had it, I was having like heart palpitations. It's like that's when I quickly went from bookkeeper to CFO. Like I was like, okay, I'm learning this more.
it actually happens, just I mentioned it at the very start that most of the people get such situations and get such sort of feelings when they are just going to report the things, and they get realized they must have worked on it earlier.
Right?
So that's why we are holding this session. So self-employment tax is basically Medicare and Social Security that is usually deducted from your W-2. It is the same amount that you pay on your self-employment income. Self-employment income is something that you can earn as a gig income. You can earn through a single member LLC, by registering a business. You can be a 1099 contractor. So any income you independently earn without getting employed by anyone, and that is not a dividend, interest, you will be taking it as a business income in Schedule C, and that will be considered as your self-employed income. So on self-employed income, the self-employment tax is charged. That is basically the Medicare and the Social Security that will be charged on 100% of your profit amount, and you have to pay the employer portion and employee portion both for it, so it will come up to 15% almost. So when you will convert the LLC into S corp, you will be paying wages to yourself. You will be paying Medicare and Social Security on the wage amount you select for yourself. Therefore you can get saved paying the same tax amount on the whole net profit that you haven't withdrawn even. So you can take the distribution, you can withdraw the money as well. But the basic thing is, if you are paying yourself a regular salary, you are paying the Medicare and Social Security on that amount. That can be I usually recommend people that should be minimum equivalent to the standard deduction, that is around 15,000 for the year 2025. So at least when you are converting to a SCOP, at the annual salary you select for yourself must be $15,000. But obviously, if your profits are higher and you are anticipating a higher profit, we can always calculate and suggest you a better amount. You can just look around your circle that what should be the standard wage for this role or this sort of corporation would be paying. So you can pay even the higher amount, uh, but the minimum should be $15,000. So you are paying the self-employment tax on it, and you are paying the self-employment tax through W2. So you don't have to pay the self-employment tax on the whole amount of profit and debt what you will be saving uh, yourself. It will be likely it can be $100,000, it can be even higher. That's really a high percentage. So you actually can plan and select the exact amount of tax you will be paying if you're just converting that to S corp. Agu, can you hear me clearly?
Yeah, totally.
Yeah, I was just likely getting confused that you're not uh,
You're used to me
responding.
cutting you off and asking more
Yeah.
questions, but you're saying everything that we talked about, so I don't really need to ask anything. Um, I love
Sure.
how you gave a basis around the entity structures, because I find in the mental health industry, what's happening is that people work for somebody else and they're like, oh, I'm making my owner a whole heap of money. I can do this myself. My clients love me. Let me do it myself. And then they come and they do it themselves, and then they feel this shift. The shift is that they think all the clients are going to follow them, let's say 50%, 30% drop. Then they don't understand the difference between the business bank account, the personal bank account. Should they open up an entity? And then they have this double taxation. And really what separately it amazes me about this industry is how much they want to do themselves. I've met mental health owners who are $3 million, $5 million, $2 million, doing it all themselves based on like how we're saying, you know, uh, save a certain amount and then they'll put it in the bank account. Do this for estimated, put it into the bank account. And they want to manage the whole entire thing, and they've made their whole life that way. And what I really want to come out for the mental health industry is that the more you do a job that is somebody else's, it's kind of like you're standing in the way of, you may make a lot of money in your business, maybe like $2 million or whatever, but what's happened is that when it comes to selling it, they end up feeling the difference of like all the things of a benefit of what a tax manager like you could have given in terms of the value. So I love how you shared, the shift of self-employment, the different entities. I'm curious, we talked about the estimates. I'm curious how you would handle um somebody who wants to think long term around a mental health industry, because they struggle a lot around payroll, meaning they have a lot of money from the actually, let's go with a different route. So they struggle around payroll, but what happens is that, so let's say they get paid from the insurance company, what they're getting paid year end from the insurance company, it never matches what the actual bank statement has. So there's this gap of what's happening when they manage it themselves, um, because there's not this reconciliation of
what happened from the insurance company, what they made, what happened from the bank statements, what they made, and then they're like, "Oh my God, I paid out this whole heap of payroll." So, how would you suggest them handling, the that type of netting of cash deposits of health insurance, and maybe like some tips to handle team building as well? I know it's a loaded question, but hopefully you.
Yeah, this is one of the biggest problem in the health industry. uh, you know most of the people getting third party medical billings as well, and there are problem in those billings as well, and they are likely having some further issues that can be. So the best thing they must be doing, they can deduct all of the expenses they made. That is something for sure, and they need to actually be very clear and precise with the contract they made, the uh, defining their processes. That is something they must do while they are making any contracts, they are getting engaged into anything. So when they are just going to through payrolls, they are going through any sort of you know likely benefits, they are going through any sort of uh, billing things. So what actually happens, usually there is a loophole. What I'm just getting some words to how to explain. Just so there is actually a loophole while doing all of these things. So what happen is, likely we usually miss a part of billing.
Mm, yep,
So
keep going.
most of the times, what I have seen in the medical industry is, there are issues in billing reconciliation. They must go regularly for it. Again, what I say is,
And that's the most sorry, it's actually the most overlooked part as a CFO that I see, is that they're not looking at it regularly. They're more worried about the tax side than there is on the billing
yeah, but this is why we are just trying to create some awareness.
awareness.
So again, as you mentioned, they are earning huge amounts, and then they are finding out that there is a whole bunch of things, and that actually happens. But what I say, the more the investment is, more the income is, more the opportunity to plan. And again, I would say, you must be regular with your bookkeeping.
There
You
we
must
go.
be regular with your cash flow maintenance. You must be regular with your billing reconciliations, your bank reconciliations. Once you are up to date with your books, there is a chance that any you can always improve your processes. You can track your loopholes. You can assess your tax needs. You can plan your taxes. You can uh, do certain things that others cannot even imagine.
Mm,
I would say likely a person is having like $1 million in tax due at the year end. He can save up to $500 if he only properly plan it.
mm,
So the
yep.
thing is, I just asked you the numbers that you said. Obviously, I will be likely quarterly having this number. I will just ask you, what's the numbers for 2024, and you will answer me that my books are not updated. You can estimate how you can estimate the future if you're not maintaining the books regularly. So I need a base to budget the future. to advise, uh, I would also be needing that, uh, what would your be investment potential through which you can save your future taxes. You can even share the plans. You consider that you're just going to buy a home, you're just going to buy an energy efficient vehicle, you're just going to buy uh, to install an energy efficient housing. So I can actually recommend a lot of things how you can just utilize. You can just go for if you have a rental home available, how you can utilize that for your business as well. You can what part of your business you can outsource, what part of business you can just go extend, go for extension for the moment. And if you will extend that, that will create such sort of expenses that can actually reduce your tax liability. So this all comes with the numbers.
Hmm. Without the numbers, you can't get the answers. And without,
That's
in
for
order
sure.
to get, huh?
That's for sure. And all the loopholes are basically
In the
very
numbers.
basically, if you're not regularly maintaining numbers, you will find the loopholes at the year end for sure.
And I want to just stop here for a second. All of you business owners, that is your like a sum of your frustration. Like at this point, you can't do anything without the numbers. You can't do anything without the planning. Unfortunately, a lot of you are afraid of the numbers, afraid of money, and have a lot of these money blocks. What I will tell you, the only way through those is forward, literally right through them. Money could be made. What can't be made is what can't be made is something that you don't have. And the skill that you have is to help clients and give them a skill that you have. So the profoundness in planning is that all of this is a non-issue. Just to kind of loop this here with a story. We had a client over Christmas where we actually told her she needed to take another payroll because this self-employment tax that he's talking about, it was going to be like crazy high for her. Now, at the point of when we got the account, it it already was high, and there was only a limit because of the timing of what I can do, but it saved this company around the double social security and Medicare that he's talking about, this double taxation on self-employment. So without the numbers, you may get started if you're doing it on Excel. You may not have a process yet, but the thing is here, get started. There's no better time than to start when that awareness hits you, when it's like, should I, shouldn't I? Wherever you are in self-employment, whether you are working for yourself, you already made the entity, it really doesn't matter. What matters is that you have the right support guiding you, because one mistake can really just lead you down. I've personally seen as a CFO and tax strategist too many climb the ladder with income, but then what happens is that quickly they go down because of these things that we're talking about tonight.
Yep.
And go ahead.
I'm just agreeing with your words. This is really something. And one more thing I would like to add up in here. Uh, each dollar you spend on record keeping, keeping your records up to date, each dollar you spend on your planning, budgeting, financial services will give you at least a return of 10 to 20 times for sure, because it
Hear
will help.
that. So if you're not paying, listen to the return that he's telling you of what give you. You may feel it with your initial outlay because maybe you're not feeling or you're not used to paying for things, but that return, it gets to be year after year that you get to take this with you and then build on it. So it's almost like a different income generating activity or like a different type of cash flow, because or else that money is just like it's just like as if it's right, it's just gone with the wind. It's just like, and if you think of how many hours that you actually worked on that, it's like nothing. It's just gone. because it was ill planning and because of fear and paralyzation, where you just feel like, oh my God, oh my God, oh my God. Let's take a step back. Tonight, we gave you all a lot of structures. Digest the information. You may need to hear this a few times, break it down. Of course, you're going to have questions. I wanted you all to have a structure that you can work from so that you don't have to feel in the dark. Whether you're a client or you're not a client, you just want the education and the value, and you're just kind of like seeping in here, you know, but it's all in the numbers, it's all in the planning. And you know what the advantage to planning is? You get to do more. And when you get to do more, you get to sleep with your head down at night, guilt free. And that's what I want for all, that's what we want for all of you tonight. And we're going to continue to come out with all of these common questions so that you have some basis to work from.
Yeah. Can I add something?
Yeah,
Uh,
never ask.
Since just to remind everyone, this is something since COVID-19, most of the people lost their practice regarding their bookkeeping, their tax filings. So if you are even falling back, you can cover that up. You must discuss the situations, and uh, with there are a lot of things, a lot of opportunities available there. Even there are iris you can request to the authorities for the penalty waivers. You can get the discussion, you can get a bulk discount, getting your uh, all of catch up accounting done. So this is something you must consider. There are a lot of people that actually lost practice of being compliant and being updated during COVID-19, and till 2021, it was the first situation, and most of the people were just uh, in their homes, and there was a lot that happened. And there are still people that are coming to us to file their 2021, 2022, 2023 tax returns, even from 2019, and even more back as well. So
Literally. I
so
just spoke to somebody yesterday. I was telling you, and it's a number of years. And you know what happens with the number of years? You think it's some type of like health issue, but it becomes a health issue because it's just sitting on you. I explain this as like the backpack that doesn't want to move. The garbage men, when they come, is when we want to throw out that backpack and say, bye bye, I'm going to do this, and then just take it 1 year at a time. I spoke to a client yesterday and she has a number of years. I think there's around like 12 returns that we talked about doing. And she's like, just please do it. Here's my credit card. And this is not even like a joke. And I said to her, what we're going to do is like this, is that we're going to do it 1 year at a time. And then we're going to charge the next year. It wasn't about, and that's the thing I want to make clear here too, is that we're here to help. Obviously, businesses need to make money. I have a family, Anna has a family. However, we're here to make a difference and an impact to really help you. Is that let's just do it together, 1 year at a time, if that's your scenario. And there's no shame. You're not alone in this, and we want to be here to support you in any way possible.
yes, we are with you for sure.
So as we're wrapping this up, anything you want to add to this topic or in general, just to help? We'll be back on, as you know, but just to kick off the mental health industry in the together capacity, anything, as we kick off tax season now, tips or just something to say like, mouvez-vous, like,
Not much, but again, you must be planning your 2025 years every year. In the start of the year, the best time, January, February is the best time when tax practitioners, before the season starts, likely it will be starting by 27th of Jan. Tax practitioners usually have a good time to give you. So you can discuss with your tax practitioner your situations, you can plan it properly. So, and you can actually go with your plan throughout the year, ending up saving the taxes a huge amount of money, and just be burden free, to be very clear. So once the year is passed, you will be feeling likely it's $20,000 tax I have to pay. Do how I'm gonna make the payment? Literally, I have to make this much money. I have to pay that much tax. So this is the real feeling
The real
of
feeling.
almost every taxpayer. So IRS has actually made the estimated taxes rules, so you can just pay it in 4 installment in advance. You will not be penalized. You have paid that in installments, and you will not be owing that much tax at the end of the year when you are filing your taxes. You won't just get anxiety at the moment of filing your taxes. So this is something
The
important for the.
calmness in the planning. That's what I'm hearing is he's portraying to help you is that there's calmness in the planning so that we close the year, the money is in the right place. And think about this $20,000 rolling bill, $25,000 plus more can just go into PTO. It can go into actual retirement savings, and actually checking off the boxes in a way that will support you. So thank you so much, An, for coming and joining and supporting our HCT clients and helping our mental health owners grow. And I appreciate you all for listening. Keep the questions coming. We're here to help you. It's our pleasure. We look forward to talking to you more. We want to be here. This is something that we're um, like lifelong plan to do. And let's make it easier. We're here to help you and work together. We look forward to talking to you and thank you so much for listening. As always, any questions, let me know. Sometimes I know it's hard for people to put it at the bottom. So feel free to DM me if it involves on, of course, I'll make that happen and more to come.
Yeah, thank you so much, Marco, and again, everyone, please keep your records up to date. So that is one of the most important thing in your life.
Good night, everyone. And planning is the key. Talk soon.
Yeah. Good night.